Welcome back to Real Talk with Katie Kim. Today's conversation is something that sits at the center of business, wealth, and legacy, capital. Because every great company, investment, or opportunity eventually runs into the same question. How do you fund it? My guest today, Lauren Brychell, has spent years in the world of investor relations and capital raising. She has helped raise tens of millions of dollars for real estate investments and now works with entrepreneurs and operators to build systems that attract investors and scale capital. She's also the founder of Equity Elevated Consulting and author of a book, Beyond the Lead, which explores how capital raising is really about trust, relationships, and long-term systems. Today, we're talking about the real cost of capital raising, the systems behind investor relationships, and how entrepreneurs can build financial legacy through capital strategy. Lauren, welcome to the show.
Thank you so much for having me, Katie.
Awesome. So, as you know, we're going to dig right on in. All right. Lauren, you didn't originally set out to become a capital raising expert. So before we get into it, I want to take the listeners, I should say, back to like your origin story. How did you end up in this world?
It's a great question. And yeah, it was quite a funny journey to get to this spot where I'm at today. So I started earlier on in my career with a commercial real estate firm that was in their earlier stages. So I was lucky enough to be hired without any capital raise or commercial real estate experience at all. And I had a marketing background. So they hired me for marketing originally. And then day two, our co-founder said, you know what, you would be really great at capital raising. And I was like, cool, what is that? Like, I have no idea. So he was my mentor for a long time until I was really schooled up on capital raising and finance and how this whole thing works and why investors invest and how to talk them through it and educate people on why this is a great potential option for their portfolios. And so the rest is a little bit of history there, but quickly started working on both the marketing and the capital raising side. I ended up being pretty good at the capital raising, mostly because I love people. I love talking to them. I love building relationships and I love helping them with their goals. It's such a fun, very niche kind of role to have, but really you're helping them build their wealth for whatever their goals are. And that's a really cool thing to do and present them with opportunities they might not have otherwise. And so I loved it. It was a great fit. And then a couple years after that, probably 5-6 years after that, I saw a niche in the market where I could really expand and help a lot of other firms with the knowledge that I had brought and learned over the years. And so that brings me to where I am today.
I love it. So you talk about those early deals, and I love that. One, I want to take a second to pause. I love when mentors or like leaders in the company or managers actually see talent like you have, like raw talent and passion, and be like, there's a couple of people we brought in our firm where I'm like, your skill set's here, like your passion is here. I want to take you here. Are you game? And it feels like that's what that manager did, that leader did. So Yep. Let's dig into what did those early deals teach you about money and about how money moves, right? That you didn't know before.
Oh my gosh, that was such an eye-opener. So I had no real finance background. My parents didn't, they were very smart, very well-educated people, but they weren't necessarily like finance people either. So we never really talked about that at home. And so it was a whole new world. And I was like, wait a minute. So people can invest passively into these cool deals and make this money and have these tax benefits. And so it really rocked my world. And of course, there was a huge learning curve because you don't just jump into what bonus depreciation is and how to read an underwriting file overnight and how to explain it to an investor, right? So it was a huge learning curve, but it truly changed the trajectory of my life as well, because now I'm able to invest passively in deals. And I have been since I was probably 25 years old, which is really cool to be able to set myself up for success in that way. But yeah, and it's a lot more well known now, but it was kind of like the best kept secret. If you weren't in the club talking about it and your friends weren't investing in it, you didn't really know about it unless you were Googling on the internet, how do I make more money, right? How do I invest? So it was kind of an eye opener from a lot of different angles. And now I love sharing that knowledge with other people who might not know about it.
I love it. I love that you mentioned that you didn't really talk about that at home, because especially during the month of March, we're talking about, my word for the year is focused. If anybody's listening that hasn't been following us along. And March, we're really focusing in on that financial legacy. Like, how are you leaving it? And we just had Julia Myers on, which she teaches families how to talk about that and how to receive the wealth. And I'd love for you to connect too. That might be, maybe we just do a multi one time. But I love it because with my kids, when you talk about like, oh, you can make money doing that, like there's times when, like, even with my nephew, I remember when we were driving and he was like, oh, this is such a hassle. I'm like, well, yeah, but here's the thing is, like, we're on vacation right now and I'm still getting paid. And he's like, what? He's like, you mean like vacation pay? I'm like, no, Like, I'm getting paid. And so we were able to talk to that conversation and go, and now he's like investing. Same thing with my son. It's like, how do you start those conversations when you didn't grow up in families that had those conversations, right? And so one of the things that surprised me when we first started doing syndications and capital raising is the weird, unique conversations you have with investors. Like, I've had conversations where they're like, Katie, we don't need to make more money. I'm like, wait, what? Like, everybody needs to make more money in it. And they're like, no. We want to make money, but we want to keep more, right? We want to figure out like some more tax strategies and stuff like that. So what are some questions that have like, or conversations that have surprised you about working with investors? Because there's crazy conversations that happen. So
Yeah, gosh, there are so many crazy ones. I could sit here all day and tell you a lot of different stories. But yeah, I mean, I would say I would echo that almost too. A lot of people, yes, they want to make money, they want to preserve wealth. They don't necessarily care about the monthly check that comes in, but finding these strategies and setting up the entities and things to the way that you can take advantage of the tax benefits or become a real estate professional tax status or whatever that looks like. Those are always really interesting conversations. Obviously, the ones around IRA investing and all the UBIT and UDFI rules, and it can get really hairy pretty quickly. And of course, I never give tax advice because I'm not licensed to do so, but still talking through investors and helping them figure out, okay, which entities would make most sense to invest through to hit those goals. And it's really a strategy play to make sure you're doing it correctly, but it's quite fun. But yeah, I've had a lot of very interesting conversations over the years, ones that have completely come out of left field as well. Of course, you've got your usual ones asking about different things in the pro forma or sensitivity analysis or the deal themselves or the markets, right? But then you've got some that I don't even know. Like I said, they're crazy, right? They're like on another planet talking about things. You're like, where did you get that question? Yeah.
Oh yeah.
You always have to be prepared for anything.
Yeah, when I teach in person, before we go on breaks, I have this jar and it's actually on the front of it, says you can't make this shit up. And literally I'll have a classmate, right, like pick a thing out of the jar because it's a whole bunch of papers and they tell stories about like either my stories or my investors or my clients. It'll just be the first part of it. And there's always a time where like, come on, Katie, like this didn't really happen. I'm like, oh, you have no idea. Like, and so we'll talk through it because to me, it's about the reps, right? Like you don't know what you don't know yet because you think one certain way and then life's going to happen. The economy is going to happen. Like, how do you pivot and how do you adjust on that? And so with that, like, what do you see as some of those big like myths or like unknowns? Let's go with myth. I want to lean into myth about raising capital and like how do entrepreneurs really get it wrong?
Sure. Yeah. So a lot of different myths out there, but a couple that I would say come to top of mind are, a myth is that you've got to pitch a deal on the first call to get them interested. And that's so far from the truth. You've really got to build that relationship, know what the investors are looking for. You're almost interviewing them as much as they are interviewing you on that first call to get to know each other, to see if it's a good fit from both perspectives, right? If an investor, its expectations are one thing and you're providing something else and they're misaligned, it's going to be a nightmare for both of you throughout those 5 to 7 years or however long you're holding that investment. So that's a big myth. Another myth I would say is that you have to hide your bad deals. I would say that everyone's probably
say that again. I'm going to stop you. Like, say that again because that needs to be said more often.
Yeah. Don't hide your bad deals. That's not necessarily going to scare people away. Being transparent about them and saying, yep, you know what? This deal didn't go to plan and here's why, and here's what we learned and here's hopefully why it'll never happen again is so much more powerful to building that relationship and that trust and having that transparency with your potential partners. That second you try to hide something, that trust is broken and they're probably going away immediately. So always be open and honest about it. Not everyone, but most people have had a bad deal here or there, right? It's just how it goes. Nothing is ever guaranteed, right? That's another, myth is some people think that they have to guarantee different things for investors, which is a terrible practice. Don't ever guarantee anything because it's real estate. It's risky. It's whether it's debt, equity, whatever, something could go wrong and you never want to have the wrong expectations in your investors' minds that, yeah, it's all good. Like, don't worry, right? Something could always go wrong. You just never know. Mm-hmm. So that's another myth. And then yeah, I would say those are the couple biggest ones that I see over and over that really need to be debunked.
Yeah, I want to go back to those because I love it when you're like, don't pitch the deal in the first meeting. Where I feel like it's like the equivalent of that is like going on a blind date and asking the person to marry you on that date. Like exactly. That's really the equivalent of doing that because you're really getting into a relationship with your investors. And if you may not want them in your deal, but you don't know yet. And so don't be so desperate to get the capital because you're signing up for a partnership with that person, right? And if you don't know their scars, is what I usually say, like you said, bad deals. And oh, I'm a big fan. Like if I say it once, I say it probably 20 times when I talk, like share your scars. Like if somebody's coming into my deal, I want to know what their scars are. I want to know what you're bringing to the table because like one, it could benefit the deal in a positive way where now like, hey, you've experienced some different things. So if we run into this bump, now I know I can leverage you, right? And I can guide you. And it's also going to tell me if you have an appetite for this type of risk because one of the things I teach is the time, talent, and treasure triangle, where it's like that also with your risk tolerance and your goals, really evaluate how and what you should be investing in. Because otherwise, like this deal might not be a good deal for you. And if we don't build that relationship, we don't know, right? And also, the last thing I'm going to say on scars, because again, I can get on a soapbox with them, because I think we hide them and they have power over us if we don't talk about them. But once we talk about the bad deal, it's like nobody can like talk about it. Like, yeah, I had a deal go bad. Yeah, well, I heard Katie had this deal. Yeah, I'm telling you about it. Like now, like just come to me and ask me about it. Like we take the power of that mindset away by talking about it too. And people want to know that you've learned something, right? Like I want to know you've been in the trenches a little bit and you've pivoted, not like I just got my diploma and now I'm like trying to manage your millions of dollars. That's not going to work. That's not going to work. So
Right.
I love that. So it's like networking versus trust in that sense, what you're saying. And so one thing I know you talk about often is building that infrastructure for capital. So what does that look like for you? Is that like, when I know people are hearing they're like investor databases, CRM system, like what does that mean to you?
Sure. Yeah. So at the most basic level for me, whether you're just getting started or you're working through Excel spreadsheets and you need just something that's a little more systematized, is I always recommend starting with that CRM. So like a HubSpot account, for example. There's a $20 a month version that works great for most people until you get to a certain level of contacts or need a certain amount of workflows. So HubSpot paired with a great investor portal so that you can have people sign subscription agreements and wire funds all securely and their social security numbers aren't floating around the internet and things like that. So I like to pair those two pieces at the bare minimum. Usually, and InvestNext is a portal that I like a lot, and they integrate together, which is nice. But usually I have those. Pair it with something like a Zapier for different automation functions behind the scenes is always great. So, for example, if you're say, okay, great, I've got my base. I know where the leads go. I know what's happening with them. I can nurture them through this HubSpot account. And then when they're ready to move forward, now they're in my portal. So say then you want to go and start doing marketing and things. You can then connect your Facebook meta leads or whatever that might be through a Zap into your portal. You don't have to manually enter things. It's really just getting that foundation started. You want somewhere for the contacts to go. You want to have notes in there. You want to have information on them so you don't forget, right? That's a big piece of investor relations is, yeah, you're making a ton of calls and you're talking to a lot of people. You can't remember all those details. So write them down so that you don't have to remember them, but you can go reference them later next time you chat with the person. Set up auto tasks to call them back in 2 weeks. So you don't forget, right? Like just simple things like that. Put them on an email drip campaign for a couple of emails so that they're getting something when they come through your website versus crickets. It's going to set you apart. Simple automations and things you can set up early on. They don't take a lot of time or money, but they really will make or break whether someone invest with you or they're going to invest with someone else who does have that set up because they are keeping top of mind in your email inbox. They are calling you. They do remember, where you live and that you were going skiing this weekend and how did it go, right? Just simple things like that to build those relationships off the bat is kind of the bare minimum of what I like to see.
Awesome. I love it. And I love that you have the automations, especially as we are in the AI world and I would say agentic world now. I mean, and that's like, it's probably by the time this come out, there's going to be like 5 other things that they can enhance with, right? And so, but bare minimum, I agree with you. I think it comes back to that base, like get your shit together first, right? And then automate it as much as you can. And one of the things when you go back and you're saying like, tell the story, like drip them on emails and people are like, well, if I don't have an active project that I'm raising for, it's like, great. That's the great time to start building credentials with them and talk about your past projects, talk about, educate them on your process. Even like if it's a new investor, we have just a 1-page, like high level term sheet. Like this is kind of what it is. If you're interested, then you can reach out to us. And then we sit down with them. We have a meeting. We understand what their wants and needs are. We, again, put in our CRM system and see like, does this fit? And if it does, then we move to the next meeting, which is signing the NDA, showing them the deal. And, we even have a letter of commitment at that point. So they're even not signed up yet at that point because we're still vetting them, right? Because again, a bad investor or uneducated investor in your deal can tank your time. Like, oh, there's so many, like, that's a whole different episode. But I love that you have that communication strategy. And I want to throw out some of those examples because I hear even right now, like, oh, the limiting beliefs as she's saying this stuff. I don't have this. I don't have this. What you have, figure out what you have right now. I have this. I have this. Keep your positive mindset and then take action, right? Set the stuff up. Trip it. Teach them about how the process works. That's something you don't have to have experience and you just have to know it. And hopefully you are if you're at that level. So why do some founders consistently attract that capital while others seem to struggle? Like as we talk about the systems, now let's talk about like what's the struggle? And I know I threw out like some mental limiting beliefs, but I'd love to get your take on that.
Yeah, no, that some of those limiting beliefs are so true and so accurate. I do see that a lot. And actually, this kind of ties back to another myth that I thought of too. And you spoke about it recently, is you raise the capital before you need the capital. That's why some people really succeed and others don't. Some people are always networking. They're always looking for capital. It doesn't matter if they have a deal or not, right? Some people are like, I'm going to wait until I get this under contract and then I'll start. It's like, no, like that's how you fail, right? Unless you've already got a great network that's warmed up and ready to go, like that is one of the ways that some people just absolutely fail. And that's a terrible position to be in, right? Because it's easily avoidable. So, a myth is start raising capital before you need it all the time. There's never a bad time to create relationships, and there's a million different places to find investors. So the people who are always out there looking for capital, always having their capital eyes on, are the people who are going to succeed the best. You could be on an airplane. Who's sitting next to you, right? You never know. They might be an investor. You have to talk to them and always have your capital goggles on.
Like that.
And then that nurture piece is that second piece, right? So a lot of folks, they'll spend a lot of money on marketing. They'll go out and they'll get a ton of leads, but they don't nurture them properly. Maybe they send out one auto email to them. Maybe they call them once, they don't answer, they forget about them, and they just drop through the cracks. So that's another big way that I see people either succeed or fail is how much are you nurturing your investors? Are you giving them 5 to 7 touch points in the first couple of weeks to get that best opportunity at getting in front of them, or not? Because your competitors probably are, and then the people who are in front of them and they're keeping top of mind and they're giving them great content and a beautiful, one pager to share, and they've got everything organized. Investors can tell. And so having that nurture plan set up and actually executing on it is going to really make or break whether you're raising it or you're completely failing there. So I see that over and over again.
Yeah. And I love that, like that directly ties back to when you were talking about systems, so when I first started in the game of capital raising, we didn't have all these investment portals. I mean, like amazing. So we had to create them manually, which is awesome, and said no one ever. And so like in that process, you're taking the time to set up and everything, but now you have these amazing systems that do 80% of the work. And I think to me, what I love about having those automations and AI systems is to go back to what you're saying is network and develop and build your audience, build your community before you need it. And I think you should never stop. I love how you said, never stop, networking and building that and letting people know what you do. Because I mean, I can tell you my energy feels it when I'm not out business developing. Like, I'm like, oh, why am I so sad? Why am I so low energy? I'm like, oh, I haven't like gone out and meet new people like that. But that brings me energy. Or I know some of my friends listening are just like, oh yeah, Katie, that would like, oof, I need to like build it up for a week, but whatever works for you. And I think that with these systems now and the AI, it's allowing us to focus more on the human part of it. In my mind, I like we say, so we are AI engaged, human empowered. So where it's like, yeah, we have AI that does a lot of the automation, the systems, but we still want that human touch because like you mentioned, you got to know what your investors want. We have criteria for our investors buy box, which is really their investment box, right? And one of the things with our investors is like when you said like, keep building that network, I did for the first time an oil and gas raise. Now, last year, I personally wanted to invest in oil and gas. Like this was me. I wanted to. And then people are like, well, do you want to help raise it? And I'm like, my people are real estate. Like the real estate people, they're not going to know. So I'm like, we have to create a masterclass of how do you invest in oil and gas? Like I got to teach them because they're used to that me giving them that experience, like teaching them about the investment. And I'm like, ladies, I'm probably not going to get anything this year, like investors to this, but I'm in, let's go. And so surprisingly, a lot of my investors were like, hey, we've been looking at this for a long time. Like this masterclass was great. And it's how you educate. So how you show up as your brand. And so I like that because to me, your brand is really starting to come to the forefront in the book you just launched, which is another bucket list item. And I'm so one, like cheering you on because on my bucket list is to write a book, but you wrote the book called Beyond the Lead. And so I love it because it gives us insight to your personal brand and your professional brand of how you do it. So why did you feel that this message needed to be shared?
Yeah, it was a really important message that yes, you can bring a ton of leads in, right? It's easy to throw up a meta ad and get 200 leads, right? That's super easy.
That are nowhere qualified for you.
Nowhere qualified.
You can pay for that.
You can absolutely pay for that. But what are you going to do with those leads? What happens when they come through the door? So after you get that lead in, how are you going to have the best success at converting that capital? How are you going to give your investors a great experience? How are you going to ask for referrals and bring in other partners and have a longevity capital raising business, right? And so it really dives into that. And the goal of it was, I never really found a capital raising book that actually gave people the blueprint that they needed to go out and build things themselves. Because I always find that kind of frustrating. It's like a sales tool and you're like, well, like I've got like 60% of the info, but I can't actually execute this because there's not all the info there I need to take and run with it. So I put all the info in there that people would need to actually say, hey, I want to do this thing. In 90 days, I want to go from zero to raising capital. And like, here's how you can do it if you want to go do it, right? And so that was the goal of all the other important things other than just bringing leads in the door, because leads don't mean anything if you can't convert them and can't nurture them properly and provide a great experience. And so that's what it's all about.
I love it. And it makes me think of a conversation I was just on where they're like, do you have 50,000 plus, people in your newsletter? I'm like, no. And they're like, well, then you can't qualify. I'm like, great, but my open rate is percentage and it's high. And they're like, whoa. I'm like, yeah. So if you want a 5,000, like if you add the total to 5,000, I'm hitting your open rate like times 2 because we've curated the right leads. And that's, I think, what you're talking about is the right people in the list to have the right conversation. So when you talk about that, like who did you intend this book to be for? The person who wants to get into that capital raise, like you said, go from zero to start raising?
Yep. Yeah. So zero to start raising, or maybe you've done a couple of deals and you've kind of got an idea of how it works, but you're just unorganized. You don't have your systems together. Now it's starting to feel really overwhelming. It's like, okay, maybe I have 10 investors now, but I need to grow and scale to hit my new goals this year. And like, this just feels overwhelming. That can be a full-time job managing all those investors and leads if you don't have systems to help you organize and automate a lot of it. And so that's exactly it. And we do talk a lot about the avatar, the investor avatar. Who are you targeting? Let's focus on quality over quantity, because it does you absolutely, to your point, no good to have a bunch of people who are never going to invest with you, just taking up space and time and energy. So figuring out, okay, who we're targeting, how do we properly set our messaging to them to make sure that we're hitting the audience that we want? And then how do we bring them in, nurture them, convert them? So it's a whole process from start to finish. And I mean, I guess the book could be for anyone who just wants to optimize systems, or they feel like they're not converting enough, or maybe their sales team is maybe lacking on, how to chat with investors and how to qualify them and what questions to ask on the first call. And another myth, I guess we can go back to is, investors should be doing 80% of the talking on that first call. A lot of people think they've got to talk and talk and they get nervous and, they're maybe a little desperate for capital or whatever it is, but you should be doing 20% of the talking or less on that first call. Like, let the investor just open up and talk about their goals and their pain points and what they're looking for and their experiences so far. And then that'll help you tailor your responses going forward. So.
Yes, I love that. I love that. It's the myth of you have to control the conversation, where really you're controlling the conversation by listening. And that's what I think I think that's sales general. Like a lot of people don't understand. Let's call it building relationships general, is like you have 2 ears and one mouth, right? Like mom always said. So like listen twice. And I find that like those conversations I love would be like, so what brought you here today? Like what brought you interest? Like and I love too is like, what do you think we do? What do you think we're putting together here? Right? Because then it gives you, like, they already have like questions they want to ask you and they're so excited. So let them ask that, because like you said, then you can tailor the conversation, the presentation to them, to what they're looking for and what they're needing. Because they may not care about getting this return. They would care about like, what are the tax benefits of here, right? Like we had a deal that only gave a 4.8% cash on cash, but because of all the write-offs and incentives, it was a 353% return in 4 years. So if I would think that they're only on cash, I would have to like educate them of why this was a good deal and the different nuances of it if they already knew about it, it's like, okay, let's get onto this, how this is going to help you, right? So I love that. And it's really the difference between like leads and relationships, right? To me, capital raising is a long-term game. It is a long game, right? It's not like the short, yeah, you can go online and get like a quick little crowdfunder person who's looking at it. But I guess that's not how I raise capital. I raise capital with defined network people who, know, like, and trust me, and we go forward that way. But so what is one of the biggest lessons that your readers would take away from the book?
I think one of the biggest lessons is stopping everything you're doing right now until you have your tech foundation in place. Because everything else that you do before you've done that could be a waste, right? If you don't have that CRM in place, if you don't have whatever that, base tech stack is, stop everything else, get that right first. That is such a big emphasis in the book because a lot of people think, oh gosh, we have this capital raise coming up and we need all these investor leads. And now I'm getting nervous. So I'm just going to go get leads. And then they don't convert, they don't nurture them properly. Half the reason is because their tech stack and their systems aren't in place to be able to actually go forward and do so. So that's the biggest takeaway. And yeah, like if you're thinking about capital raising or you have started and you're overwhelmed with it, stop everything you're doing, put your tech together, and then you can go back to whatever else it is, because that's such a big piece that it's not always intuitive in the moment to stop and just go back to the basics before you continue trying to raise, because it really makes a huge difference in your conversion rate.
Yeah, and it's the shiny object, right? We all want to be like, everybody just wants to hear about the deal and all this stuff. It's like, yeah, but then if they never hear from you afterwards, it doesn't matter. Everything you did to get to that point is done. So I'm told, and in my guidance of my journey to write a book, is that writing a book actually forces you to clarify your beliefs. So what did writing this book teach you about your beliefs?
Yeah, that's a great question. Gosh, it taught me that, well, a couple different things. One is it really forced me to write down the process in which people should be going about this, because I have a process in my head, and depending on the client, where they're at and everything else, we kind of start and we dive in. This really forced me to start, okay, if I was starting from scratch, what would I be doing step by step, and really talking through it well. So it forced me to just kind of reevaluate and make sure that I was keeping myself accountable with every piece of advice that I'm giving, right? Wait, hold on. Is this right? Am I keeping in track here, everything else? So I would say probably that, but it also really had me reflecting on my whole entire capital raise career and all the different pieces that made a huge difference. Maybe that's tiniest little piece in the world, but it made the largest difference in the relationship or in the conversion or in the longevity of the investments. And so that was kind of fun to reflect on as well and kind of put all that to paper.
It's fun to look back. I think a lot of times when we are those high achieving women, we just look forward. Next, next, next. I think of, it always reminds me of this one very intentional conversation. We were at the year one end of the first time when I relaunched the Kim Group in 2015. We were talking about, okay, what's next year look like, right? Like the whole strategy session. Okay, we're going for this. This is our goals. And my whole team was like, I'm sorry, can we pause? And I was like, yeah. What do we need to talk about? And like, can we talk about what we just threw down last year? And they wanted to celebrate the win. And it set me back because I was like, yeah, but that was last year. Forward, right? And what it made me realize is that you've got to share the wins. You've got to share the journey, the struggle, the communication. So when you talk about that, and I know we're leaning a lot into systems, people are gonna be like, Katie, I got it, systems. But that also helps you stay in communication. It also helps you stay your focus on the people engaged. And so in your book, you mentioned about setting up those systems. Talk about, you said pause, get the systems, the tech stack set up, and which it's interesting you say that because like a lot of times with my clients, when we're growing them for real estate, we also look at the business side and where's the weakest link, where's the strong foundation. Goes back to tech stack, goes back to systems, which are SOPs, right? It's like business 101 going up. But we also need to come back to that a lot of times because we grow to a point that we outgrow our systems. So now we need to almost do that business 101 at the next level. And so as you're starting to grow your business and your consulting practice, what do you talk a lot about like that experience? Like let's focus the question on more of like that investor experience for it. Like what does a great investor experience look like?
Yeah, a great investor experience is truly something that is take your sales hat off and put your customer service hat on. That's how you have to kind of think about that in that transition. So the experience should start whenever they see you out and about, whether it's online or at an event or through a referral. Every piece of collateral, every picture, every video, everything you're putting out there should be as polished as possible. So that's going to be that first step of saying, okay, this has been a great experience from the start. There's no typos. There's consistent information across the board. Everyone's speaking well. It's just like simple things that, you're rushing, you're busy, you're trying to get things done, but it makes a difference to have that start off on the right foot. And then, again, building that relationship from the first call, letting them do the talking, caring about them, taking the notes. When you're following up them, making sure that you're bringing details into that conversation to make them feel like they're not just a number. Hey, how was your ski trip last month? And I keep bringing up skiing because I live outside of Breckenridge here, and I'm looking at the mountains right now. But
next podcast is in person. Okay.
Yeah. Right. So just like having those notes and those little touch points and checking in with details that makes them feel kind of special and seen. And then as they're going through the process, really holding their hand as much as they need to. Yes, it's tedious and it takes a lot of time and everything else, and you're busy, but making sure that they understand the process and they don't have any tech issues in your portal and all those different pieces. And then once they actually invest with you, making sure that relationship and those touch points don't just stop there, because a lot of people kind of forget. They're like, okay, investors in, we're good, we got the capital, now we got to close and do this deal and everything else. But that's really when that servicing piece comes into play. Are you reaching out to them on their birthdays or sending them a little gift, something simple like that? Are you checking with them once a month, once a quarter, whatever you think they would like, just to say, hey, how's it going? And building that relationship further and not just asking for capital every time you call them. Are you inviting them out to dinner or lunch when you're in their city, right? That goes a long way as well. So just continuing to build that relationship and making them feel like they're not a number, and truly just being there for them, answering their calls, answering their texts, emails within a certain time frame that's not 3 days later. It's going to make a huge difference.
Yes. Yeah. And that's a lot. I think that's what I think a lot of people get tackled with, is that like, if you give everybody your cell phone, then like, just know that that's the system you're creating. So then when you start to get, 100 people texting you all the time, they're still going to accept that or expect that same response time. So think about that as you scale. So maybe it's not giving your cell phone, it's giving, something else that you can actually manage that at a higher level. Because that's, I think, something a lot of people get tripped up with. And oh my gosh. And you have to manage the expectation of channels, because now you have like text message, you have your phone message, you have WhatsApp, you have Voxer, you have like your email, you have your company voicemail. I mean, like I told my husband, I'm like, there's no way we are doing a phone answer machine or somebody else is handling it, right? But that is what you need to manage, as to how you set up the expectations of your investor for like where and how to communicate with me. I know some people are like, only communicate with me on WhatsApp. That's it. Because that's like their business. And then the other ones are personal. So that's, I think, one of the things I see when you're talking about that, like that experience, once you set that standard, that's what they expect. Right. And so as you grow bigger and you get more investors and you have more people to respond to, they're still expecting that. And if they don't, then they're less important to you. Right. And so now you just diminish the relationship without intention to do so. Right. On that side. So I think that's a great way where technology can help you and also have some guardrails on that side. So as we know, and one of the topics we're focusing on in March is financial legacy. And so I love the fact that you've started to, again, establish the knowledge and that capital with your book and with your consulting and how you work with people. And I want to take a second to pivot a little bit, because I want to ask the question, why does capital matter in the bigger picture when you're building legacy?
That's a great question. I think capital matters when you're building legacy because there's two pieces to it. One, you can grow larger and do bigger deals and build more legacy with the help of other people's money. And two, while you're bringing other people's money, you can also provide those same opportunities to folks who might not have access to it without your deals. So it's kind of a win-win. You're able to grow and scale and do bigger deals and hit your goals, and then everyone else gets to come along with you and also achieve their goals. And maybe they just don't have time to be the ones operating that deal, but they still want a part of it. And so it's a really cool thing, because as long as all the partners are aligned and all the investors and everybody is aligned, it's truly a win-win, and it's a really cool thing to see people benefit from all angles.
Yeah, I love that. I love when you said like you're giving them an opportunity to invest in things that they may not know about or not have access to. And that's like one of the biggest things I think when working with women business owners, where they're like, oh, I don't want to, like, I want to go and get this hard this or that or that. That's going to like give them cost them more for that capital. I'm like, bring people into the deal this way. And I said, you do not know how many people would love to invest with you. Women who have amazing networks. And if you think I'm talking about you, I probably am. And I will text you this episode, ladies. And I'm gonna, because that is, you're missing out on an opportunity with the audience that you already have, with that network you already have that know, like, and trust you, that they would love to invest in a deal with you. Even if it goes bad, they know, like, I'm investing with X. I'm investing with Lauren, and she's going to do everything she possibly can to do this deal. And like, I would rather invest with you than with somebody I don't even know. And I'm leaving everything up to chance at that point. And so that's a big mindset that I find working, especially with women business owners. It's like, control how they come in, which I know you talk about, like the structuring. And that's something I actually went to, like, this SEC attorney workshop, and people would be like, you're a real estate agent? I'm like, yeah, I'm a developer. They're like, oh, I'm like, yeah, I want to know, like, all the ins and outs. And I actually took it 3 times. And the same guy was like, why are you back here the second time? Like, because I want to hear what I didn't hear the first time. I want to process it, because now I've learned that. I put that in place. And then the same thing, he's like, okay, Katie's here for the 3rd time. Let's go. We're going to, ramp her up in the room. And I think it's that repetition, but always wanting to be better for your network and your clients. And so that's my soapbox, I would say, is to make sure that, like, as you're doing that, you're creating that impact and that legacy. And so what kind of legacy do you hope your work creates?
I hope my legacy and my work creates confidence in people who have always dreamed about doing bigger things and raising capital and building these businesses, but they don't know how to get started, or they're not confident enough in their skills, or whatever it might be. I hope it gives them the confidence and the knowledge to go out and just do it, because I feel like that's that. And you said a phrase earlier, and I can't remember it now, but kind of that mindset block that a lot of people have. I hope to get them over that. Right. I hope to get them over that and get them to feel confident enough to say, you know what, I can do this. And maybe I am just getting started, or maybe I have had a bad deal, or whatever that reason might be, or maybe I don't know how to market to save my life, whatever it is. I want to give them the skills and the confidence and the knowledge to be able to go out and do that and achieve their goals. Because that's the legacy that I'd love to leave behind. It's changed my life, being able to raise capital and invest in cool deals and build my wealth that way, that I would just love to see other people do the same.
I love that. And I love that you're like, just get started, do it scared, right? That's like one of the things you hear. It makes me think back to the first raise I did for someone else. And I was sitting here like, oh my gosh, how do we do this? And you're like a duck on a pond, right? Your feet are going like, da, da, da. And I remember I'm like, and what do I want my legacy to look like? What do I want my brand to look like? Right. And I was like, raw, gritty, and like, we're going to go to the mat for you. And so we did demo day, open house. We invited everybody to like the demolition and the news. I mean, we made it very public. And it's interesting when you talk about doing it scared with public and news, there is like a whole nother level, but it makes you show up. And we would do like hard hat walkthroughs, hard hat happy hours. We did the happy hour outside the building for all my insurance agents that are watching and listening. And we loved it, and we filmed it, and they're like, this is so great, because again, they got to be part of the project experience, not just give you a check. And some of them liked that, and some of my investors didn't come to any of it, right? But it was, what were we curating in that experience? And then when the projects are over, they're kind of like, we miss hanging out. So like we would get together like once a quarter and just at the property and like support the businesses at the property. And so it starts to curate like, what legacy do you want to build? And some of my investors are just kind of like, I want to learn more. And so we start to meet on quarterly basis of like, hey, nothing's really happening because we're at, a stability milestone, and we're stable. Knock on wood, we're always working to get it, the favorite F word, full. But like, what is that experience? And just think of like, I always challenge people like, what did you miss? What did you not know about the process? And then like incorporate it, like empower somebody else, bring somebody else along, right? I have a favorite saying of build one, bring one, be one, where, like be a leader and help somebody out, bring one along with you, and then lead one, right? So I love that. So final question, because I know you are a busy lady and you have many meetings. So what's the first, as we bring this back? So definitely we'll put the link to the book in the notes and all your socials in the show notes there. So definitely check those out, reader, and definitely pick up her book. And I want to leave it like last question for some of those that are still maybe sitting, maybe if someone's listening that wants to build wealth and legacy, because we're all about building legacy through investments or business. What's the first mindset shift they need to make? besides buy your book?
Yes, besides buying the book and doing it step by step, I think the mindset shift that you need to make, and this is something that I talk about a lot, is kind of, and we talked about it here a little bit, but the most important thing that I think will change the trajectory for you is change the mindset from I need to raise capital to I'm giving someone else an opportunity, because that is
Mm.
going to open doors. That's going to make you more confident. That's going to make that, sleazy sales call thing that you don't want to do with an investor and change it 180 to, hey, let's hear about your goals and let me present this opportunity that might hit those goals for you. And I like to talk about that a lot because it's seemingly simple, but it really does change how you look at things, how you market things, how you write and talk about things, right? And that's a game changer for so many people. So
I love that. I love that. And you are giving them an opportunity. And I do use, it's funny when you say that. I'm like, oh, I've said that like once, I've said it 1,000 times to like clients, where we have to get away from capital raising being thought of as asking for a handout.
right.
You're not asking for a handout. You're asking for an investment. You're asking for them to, participate in an opportunity you have for them. And they're also on the other side seeking those opportunities to place their capital and get a return. And they're getting a return. They're not getting a handout. So I love that is the first mindset shift. I 1,000% agree with you, Lauren. I love that. I love that. So is there anything that you want, before we wrap up, anything you want to tell the listeners, or kind of some final words that may be questions I haven't asked you that you would like to share?
I think I would just leave it with this. Something just to reiterate again is always be transparent. You'll never regret it.
Mhm.
Always just be an open book, even though it seems like not maybe the right thing to do sometimes. And it seems, gosh, that's scary. And investors never going to invest me once they hear this story. Transparency always wins. And, just do it. Everyone had to start somewhere. Don't be scared to start, or to start networking with investors before you think you're ready or you have enough deals under your pipeline or whatever it is. So just get started, and remember that literally everyone started where you did at some point. So don't let that stop you.
I love it. I love it. Yeah, transparency. Working with my uncle on a job site one time, and he was like, Katie, one thing I learned years over years is bad news is bad news. You ain't not gonna change it. Holding on to it. Just
Nope.
share it. Let your team help you, collaborate with you, and your network collaborate with you to help get to that situation. So definitely transparency is amazing. So thank you so much, Lauren. I greatly appreciate your time and getting to know you a little bit better as well. So if this conversation really hit a highlight for you, please share it with another woman. Please share it with somebody who's looking to invest in capital and grow their legacy and their net worth, because capital isn't just about money. It's about relationships, trust, and the systems that support long-term growth. So Lauren's book, Beyond the Lead, really brings that message forward, that building capital is ultimately about building people and relationships. So thank you very much for sharing your journey and your perspective with us. And if you are sitting on the sidelines ready to take action, here is your invitation to get in the game and get started. Let's go. Before we wrap up, if someone in your world needs this conversation, a founder who's carrying a lot and ready for clarity, send this episode to her. These messages land deeper when we share them. And if you're in that space where you know your business can grow, you feel the potential, but the next strategic step isn't fully clear yet, let's talk. You don't need a new identity. You don't need to force a direction. You just need clarity that's aligned with your goals, your numbers, and the life you want to lead. I invite you to book a call with my team. We'll look at where you are, identify the real leverage points, and map the smartest next move, whether that's one of our free resources, a workshop, or deeper support. Clarity creates momentum. Let's get yours. Let's go. The information in this podcast is for educational and informational purposes only. It is not legal advice. It's not financial advice. It's not investment advice. Real estate development, like any investment, carries risk. Before you make decisions, you should always consult a licensed professional, your attorney, your CPA, or your financial advisor, to name a few, to make sure you're making the right choice for your situation. I'm here to share insights and strategy, but you're responsible for your own decisions, and each situation is unique. So make sure you contact your professional team to give you your specific guidance for your specific case, as each real estate development's different and unique and has its own challenges and opportunities.